Hey traders, it's Roberto, and this is a tutorial on gold 15-minute chart just using price action, which are candlestick patterns and stochastics indicator. This is a strategy so I can try to capture every move to the upside or downside. The more volatility, the more trades. So just let me show you trades that were taken on gold on Friday. Um, Smart Trader platform will print the reversal candlesticks for you. You just need to, if you do have this platform, all you need to do is click on this icon and make sure they're blue, because when you do switch time frames, somehow they um, they do not appear. So you just have to make sure they're all blue. So here's one. This is a bullish shooting star, and all you need to do is highlight your your mouse right on it, and it will tell you bullish shooting star. And I have to qualify it with stochastics. So stochastics is oversold on a 15-minute chart. That's a trade. Okay, because it is a 15-minute chart, I'm not going to be staying in this trade for a very long time. I want to just try to capture $10, and that's what happened here. It's about 105 pips. That's a $10 trade. Entry in the bottom, exit on the top. And then what happens? Stochastics is overbought, and we have a hammer on top here. And you take your trade on the next candle, and it went all the way down for about $8.84 pips. And when I saw this green candle starting to form, I exited the trade. Okay, so that's two trades. Now, this is a bullish piercing line, so technically it's the reversal candlestick pattern. I did take this trade and I exited at the top, at the resistance level. So I'm looking to enter at a support and exit at a resistance. Okay, now this is a trade, but it's towards the end of the New York session on a Friday, and I didn't take this trade. I just wanted to stop trading. Okay, so I'm going to show you some more trade setups just using stochastics and price action on the Smart Trader platform. Okay. Just want to pick an area where the market, either the New York session or the European session, is open. Okay. And again, we're looking for reversal candlestick patterns and stochastics overbought and oversold on a 15-minute chart. And we're just trying to capture $10 on this trade, on each of these trades. Here's a trade here. Well, we have quite a consolidation going on after market rallied, gold rallied. And this candle here is my bearish engulfing candle. Stochastics is overbought. Again, I'm trying to capture $10. This one went down about $15. And then again, at the bottom of the screen, you'll see no stochastic is oversold. And we have this pin bar, so this is a buy signal. Our stop loss is below the pin bar. The wick, notice that price did retest the lows. This is a challenge because if you take your trade on the next candle and then you see the market turn around and head south, then that was about $4. The stochastics is still oversold, so if it closes below the swing point, then of course it would take us out, but it didn't do that. It rallied and never did it break until, of course, here, but I would have been out of that trade. Notice that it went up about $6, printed a bearish candle, exited that trade because I didn't see that it was going to go up any higher, and I noticed that this support level became resistance. So that was the target. And let me see what other trades were taken. I think on July 15th, I think there was another trade. Here is another trade on the 19th, Monday. Okay. Okay, so I take my mouse and I put it over the candlestick, and it shows me that it's a bullish engulfing candle. 15-minute chart. Stochastics is oversold. That's a trade. Okay. Take your trade on the next candle. Capture it. Okay, I'm trying to capture about $10. 124 pips, which is about $12. Notice that it kind of stalled out at the most resistance level. That's what I'm looking for. I'm looking for these level of support and resistance, and there it was. That was the exit. Okay. Again, just looking for, it's just a simple strategy. I'm looking for overbought and oversold conditions. And I'm looking for a reversal candlestick pattern, and there it is. There's a bearish dark cloud cover. Gold rallied, gave us this cloud cover. Now I need stochastics to be overbought, because if I have a reversal candlestick pattern, but stochastics is not overbought, it's all the way oversold, that's not a trade. Okay. All right, so that's it. That's the strategy on, and you can do this on any currency pair. Let's look at one currency on a 15-minute chart. Let's look at pound Australian dollar, which is so volatile. Okay, you can find on a 15-minute chart, you can always find buy and sell signals. Here is Morningstar, a bear shooting star on a 15-minute chart. Never broke below this level. And this is at 9 o'clock in the morning, I believe Eastern. And again, we're scalping. This is 34 pips to the upside. Nice rally because of this Morningstar. Enter the trade on a pullback and stop loss below the support down here. A nice 34 pip run to the upside. This works really well when you do this. Okay, let me just show you. When you connect the swing points on higher time frames like this, then you could always find buy signals on the bottom of the trend line and at the top. So I switched to a 15-minute chart and start looking for candlestick reversal patterns at the top or the bottom of this channel. And there were so many trades on Thursday and Friday on pound Aussie. Look how many trades on the bottom we could have taken, and so many trades on top. Right? Right now it's creating this symmetrical triangle. Hopefully it'll break to the upside or downside, but in the meantime, on smaller time frames, you can find so many sell signals and so many buy signals at the bottom. So if we switch to a 15-minute chart, and look how many trades we could have taken. Let me just make this smaller. Okay, so here is a bearish dark cloud. Stochastics is overbought. Notice, nice sell-off all the way back down to the trend line on the bottom. And on the bottom, we had a bullish engulfing candle right there. Stochastics is oversold, notice. And then you buy. So we could have taken two trades within probably 3-hour time period. Let me see. 58 pips to the downside, and the same amount of pips going in the opposite direction. See that? 57 pips. Okay, here was another one over here. Again, this is the 4-hour trend lines, top and bottom. So I switch from the 4-hour to the 15-minute chart. Notice the stochastics overbought, and we have a inside bar right there. There's a sell trade right there. Okay. Here's a Morningstar. Let's go back and see if we can find some more. So I'm going to go over this in the next webinar on Wednesday, I believe. Next Wednesday is what? The 28th of July. Here it is. There's a Morningstar right there. Bullish shooting star right at the bottom of that trend line of the 4-hour chart. Stochastics is oversold. We take a trade. And, at least 28 pips. Came back down and then rallied. All right. That's it for the tutorial. please email me if you have any questions. This is an exciting way to trade if you're a scalper, especially trading exotics because they're so volatile. They can swing 40, 50 pips um, within 4 to 6 hours. Okay, each trade, that would be like 300 pips in one day just scalping pound Australian dollar. All right, I'll see everyone on Monday. Email me if you have any questions.